In today's video, I'm going to show you why I am more bullish on Bitcoin than ever. And not only do I not believe that we are in a bear market, but I'm actually entertaining the ideas of a potential super cycle. Stay tuned. Hello and welcome to the Crypto Jungle. My name is Baloo, and here on the channel I keep crypto really simple. I teach you how to trade and invest in cryptocurrency using the yckoff method. If that is something that interests you, then why don't you hit the subscribe button? I do this every Monday, Wednesday, and Friday at 12 p.m. Eastern Standard Time. So if you're new here, welcome aboard. This is a no hype channel. This is a no fluff channel. We just look at the simple facts that we're seeing in the charts. So without any further ado, let's get into today's topic, and that is currency. So there is a bit of a currency war that is happening. There is a bit of a currency arms race that is happening globally throughout the world, where a lot of banks are kind of looking at what it may look like to have central bank digital currencies. China is looking for workarounds for US sanctions. And with the modern technology that we have today, with blockchain technology and ledger consensus and all of these protocols that we have in place, there's never been a better time for these countries that are being suppressed by the US to find workarounds. And we're seeing this in the charts. So I'm going to show you a very special chart. I'm going to show you the US dollar. By this time, you've probably seen a lot of the other YouTubers pointing at the Bitcoin yckoff distribution. I was actually quite critical of that distribution in earlier videos. It took me a while to flip my bias bearish, but when we did get that kind of last point of supply inside of Bitcoin, I did flip bearish. You can go back and look at my other video where I'm poo-pooing some of Crypto's analysis, but it turns out he was right. However, immediately after that bearish video, he did make a bullish video. So I do feel as though I kind of led my community a little bit more even keeled and didn't flip my bias too bullish too quickly, or too bearish too quickly. Anyways, I digress. This is the DXY. For those who don't know, the DXY is the US dollar when compared to the global currency index. So basically the top 20, the G20 countries, Canada, Japan, Great Britain, the euro, all of those currencies basketed together in terms of their strength against the US dollar. So that's what this chart is showing me. This is on the monthly time frame. This is a very high time frame. High time frames usually have large swings associated with them. And what I'm seeing in the US dollar is a very textbook distribution schematic. This is showing that there is a lot of weakness inside of the dollar, and we can just pair that up with anecdotal evidence that we're seeing globally with the amount of dollar printing that is happening, with the amount of quantitative easing that's happening inside of the markets, with the amount of manipulation that's going on inside of the equities and bonds markets. There is a lot of fuel to kind of show investors and savvy, smart money individuals that they're going to want to park their capital outside of cash. They don't want to hold a cash position. We're going to have to go into a more defensive stance when thinking about the dollar, and the easiest way for the wealthy to do that is to flood into assets. Holding cash is now trash. So I'm going to overlay this. I'm going to overlay the distribution schematics for those who have not seen this before. Now, the yckoff method, it's not a new method. It was invented by a stock operator by the name of Richard D. Wyckoff back in the early stock market boom of the 1920s. It's an old method. It's over 100 years old, and it still works today because the one ingredient that never really changes is human behavior. So what we're seeing here is play by play. The preliminary supply, the buyer's climax, the automatic reaction, the secondary test, every single play, every single event, Wyckoff distribution event, we're seeing in the DXY. We have our preliminary supply. We have our buyer's climax. The buyer's climax is just where the flooded amount of supply concludes, and we need to have a reaction to get back to that equilibrium of supply and demand. So what this is basically saying is we rallied into the dollar being very, very strong, and then we stopped as people stopped using the dollar and they started to flood back into the assets. This was as a reaction of the economic recovery as a result of the 2008 financial crisis. You know, in the 2008 financial crisis, the big money they moved to cash really, really quickly, and moving to cash was kind of a safe haven for them. And that's what caused a lot of the asset depreciation and what caused a lot of people to default on their bank loans, and well, the banks to default on their lending, and subsequently the housing bubble crash of 2008. So yeah, you know, Bitcoin distribution's one thing, but what's interesting about this chart is it's inversely correlated with the performance of Bitcoin. Every time this chart is rallying, Bitcoin is usually not doing very well, and every time the dollar is falling, Bitcoin has been performing very well. We can just go through each one of these. This is a fantastic example of an upthrust. We got an upthrust on the dollar that immediately went to a sign of weakness. This is even more of a distribution than the schematic is saying, because usually when you get your upthrust, it just rejects back to the bottom of the range. This rejected to the bottom of the range and then got another sign of weakness. So we have kind of a diamond formation here. For those pattern traders out there, the diamond formation a lot of times is a Wyckoff distribution. And then we had this very tight consolidation, very weak, low demand rally on our way to our final upthrust after distribution. Cash is trash. People are getting out of cash. This was the COVID pandemic. People didn't know if they wanted cash or they wanted assets. There was a lot of confusion in the market. The pandemic really shook the market up quite a bit. And the chosen path as a result of that was assets. We saw an incredible boom inside of the equities market. So as the dollar was crashing, the equities market was incredibly strong. Stocks have been on a rally. Crypto has been on a rally. So both of these events right here have resulted in cryptocurrency rallies. Now, where are we today? We are at the final stages of this Wyckoff distribution, where potentially we could begin to really break down and severely devalue the dollar. Everybody's worried about what's happened inside of the crypto markets. Everybody's lost a lot of money. Everybody is freaking out, thinking that we're going to go into a multi-year bear market. But the reality is if you're in Bitcoin, the end game isn't denominated in dollars. If the dollar really starts to lose value here and crashes down to half of what it's worth now, are you really going to be measuring in dollars, or are you going to be measuring in the market alpha? If the central banks need a reserve currency, and maybe I'm sounding really moon boy and just, you know, a little too bullish here, but I've been in the space for a long time and I understand the fundamentals of what Bitcoin is trying to do. And at its core, on a mathematical level, what Bitcoin is trying to do is separate currency from manipulation of governments. And it is an inflation hedge. That is at its core what it is about. Sure, humans speculate on it, and the speculation is where the volatility comes from. But from a mathematical comparison, where Bitcoin is compared against the dollar, if the dollar loses value, Bitcoin goes up in its pair. It may not have the same purchasing power, but it's a way for you to store your wealth, and it's a way for you to control your wealth. So I'm pretty excited about this. This is pretty interesting. If we go ahead and overlay Bitcoin, I can show you that inverse correlation with the DXY. So as you can see here, let me just highlight this area right here. Let me grab my highlighter. While we were falling in the dollar, we were rising in Bitcoin. While the dollar was recovering, albeit a very weak demand rally, Bitcoin went into a bear market / consolidation, depends on how zoomed out you're looking. Then we got to the COVID pandemic, and we had a little confusion event. It was a distributional upthrust event where a lot of people were scared, so they went to cash, but then they realized cash is not very valuable and it's going to be going down. So what's the next step? Pump it into equities. And that's, the government is pumping into equities as well with the S&P 500 and some of the the equities market is being propped up by quantitative easing. That resulted in the face melting crypto market move that we've been in thus far. And yeah, we have a retracement, but this is normal. This is normal. This is exactly what is supposed to happen. So while everybody is calling bear, and yeah, I realize my name is Baloo the Bear, but the bear survives the winter. The bear is the one that's able to forage and see the market as it really is. We're not in a bear market, in my opinion. So what am I looking for? What is the next step? What is the most important thing that I would like to see? Well, we're on the monthly chart. I want to see this monthly close below this area right here. Let me just zoom in here. So currently the monthly bar is actually below the area of the last low. I want to see us get a close below these two candles. So if we take a look at the open high low close up here at the top, the OHLC open high low close, we need a close that is above 89,923. We are currently at 89,840. So we're technically at a lower low on the monthly close. Better yet, if we can get a close below the wick, that would be fantastic. Let's make a mark on that wick. Let's get a note of that wick right there. So we need a close below 89.2, and then the final kind of nail in the coffin, realize that this chart moves slow. So although I am bullish on the future of Bitcoin as a result of the currency devaluation, this is a monthly chart. It could take a while. So there are caveats involved with this, and we may see some sort of volatility. Well, I mean, there's clearly some volatility inside of the market here. But yeah, we need to start breaking out some of these lows. I think if we get a close on the monthly candle, or heck, even the weekly candle below 88.25, we're going to see an incredible rally inside of not only Bitcoin assets. We're going to see a repricing of the entire asset market. Anything that is considered an asset, real estate, stock indexes, individual equities, some of the growth stocks, cryptocurrencies, anything that could be interpreted as a store of value, I think is up for grabs as far as price appreciation. Now, when was the last time that we saw this? This is further cementing the fact of how bullish I am on the market as a whole. Let me just go ahead and make this full screen here. When was the last time we saw this? Well, we actually saw this back in 2002. 2002 was the last time we had a yckoff distribution. So the distribution actually began in 2000. So from the area of 2000 to 2002, we had a distribution in the dollar. We had a peak of the dollar's worth. After that point, we had a massive 6-year period of asset inflation, primarily in the lending space, which trickled down into the housing market, that overinflated the housing market. That did need to come to a conclusion at some point. The dollar could only lose so much value, and when we finally got that turnaround where cash was no longer losing its value, a lot of the smart money, the composite operator, the composite man, what we study in yckoff, had to retreat back to cash. And it was that retreating to cash that deflated the value of the assets and caused the 2008 financial crisis. You want to talk manipulation? This is manipulation. This is big players inside of the space, just not, they're called smart money for a reason. There's smart money and there's retail. And, the smart money knows exactly what they're doing because they think of the assets in terms of wealth preservation. They don't care about these minute swings in the market. They're looking at it from a multi-year, multi-decade point of view. And from where we are right now, man, we're really setting up for something incredible. If we go to the last point of supply, the LPSY here, go to the bottom of the financial crisis and just copy those candles there, you can actually move that over to where we are right now. And, yeah, this could be bad. This could be really bad. Now, I'm not saying there's nothing in TA that is ever a guarantee. It's not a crystal ball. But if history is to repeat itself, which it often rhymes, we would be looking at a dollar that's worth half of what it is right now, just under half of what it is right now when compared to other currencies. Now, this may also come in the environment of global devaluation, global currency devaluation. Just because the US is deciding to devalue their currency doesn't mean that other countries aren't going to follow suit in that. We're already seeing that inside of Japan. Japan has negative lending rates. You're seeing that there's cracks coming up in the UK. There's a lot of currency devaluation going on globally. And this is just adding fuel to the flame. This is really kind of the most bullish thing that you could be looking at right now. Like, don't lose sight of why Bitcoin is valuable. And if you don't understand the big picture of what's going on here as far as the currency wars, it's going to be a bumpy ride. So while everybody is talking about this cycle, comparing it to that cycle, yes, I mean, there's going to be a top to this cycle, but I am starting to think that the bear market will be short. You know, we've traditionally had these multi-year bear markets in excess of 2 years before we get some bullish price action. If this is the current environment that we're heading into, the bear markets are going to be a matter of months, 6 months, 5 months, 4 months. You know, we have to observe the charts and look at what is going on inside of the charts. The charts are going to tell us the health of what's going on here. So, you know, we could be setting up for the largest price appreciation, the largest asset inflation event of probably your generation. It'll be the largest opportunity, I think, to be involved in cryptocurrency. So please don't lose sight of the big picture. Yes, there's finer nuances to the day-to-day, especially if you're wanting to be, you know, an intraday trader or a day trader or a swing trader, whatever the case may be. But there's a macro picture in play here, and I think that it's very, very impressive to see what is going on here. So that is all the time I have for today. If you guys enjoyed the content, please leave it a like. Don't forget to subscribe. And if you would like to join VIP, I actually have a Discord. We have a crypto community full of very fantastic traders studying the yckoff method, posting profitable trading setups. Along with that, as well as we have a yckoff crypto course, along with other exchange basics, basic crypto courses. All of that is available for you for 1 monthly fee. If you would like more information on that, please hit the links down below at cryptojungle.com. Without any further ado, please trade safe. It is a jungle out there. Peace.